Hello, everybody. My name is Thor Young. I'm a moderator at Bear Bull Traders, and I would like to do a recap for you today. During my recap, I'm going to be talking about a specific thing that is necessary for all traders to be successful. You can learn all the great patterns, all the great indicators, have all of the best formulas, and if the stock you've chosen to play is not a good stock to play, you're not going to be successful. Now, we like to call this market a kangaroo market. Before it was a bull market, you've even heard of bear market, but we've jokingly lately have been calling it a kangaroo market. Now, the reason we call that is because rather than getting upward movement or downward movement, we've basically been in this long consolidation that's just been bouncing up and down for the past month or so as the world in general has been digesting COVID and these other things. So this market's been very difficult to play. But as of recent, in the past couple of days, especially thanks to infrastructure bill potentially being passed and some otherwise good catalysts into the travel sector and other sectors about immunizations finally catching up and people starting to be able to get back out there, you're starting to see the market come back to life a little bit. And now thankfully we're above 400, so we're now making all-time highs in the SPY, and we're moving up quite nicely. So if you get yourself the right stock and you have a nice trending market and you're no longer getting bounced around by the kangaroo market, you can get some really good potential. And that's what I'd like to go over today. Just a few little things you can do to help shore up your stock list. And then after that, I'll also show you a live trade I took today on Snap off of R4 Camarilla pivot point that I really like to use, and I'll talk a bit about that. I hope you enjoy the video. If you do, please throw me a like, subscribe to the channel so you get notified when more of my videos become available, and as always, keep it green. Thanks. So I'll talk about a couple of those things now. So the first thing is I don't know if the stock's necessarily going to be good for an ORB or not, right? The only thing I can really ascertain is that the stock has, it's got good potential, let's say. So one thing I really liked, for instance, and I'm going to drag my daily chart over here, right? So Viacom here, for instance, was on my chart because Viacom had this really healthy sell-off. And I'm calling it a healthy sell-off because look how far it came down a long way, but really it came back to VWAP, maybe a little under VWAP. And it basically did a big bear trap here on the bottom side of VWAP as it represented fairly weak, and now it's springing off of that. And look at the volume that's coming with that. Now, why did I think that we had a really good chance to bounce here? So I put this on my list to watch for a long. The short interest rate, which you can get in DOS on your fundamentals screen, right, is at 18.2% on this one. Right, so we've got really high short interest, which means we've got a much higher potential for a squeeze on this one. Right, and we have a really large accumulation of shares that happened at this level. Sure, we sold a lot here, but somebody bought all these shares in the process, right? So we've got a lot of shares that have been accumulated down at this level, even to the point to where VPOC has been established in daily value right here. And all we're doing right now is we're actually just returning back to value and VWAP as we speak. And Viacom, if it gets strong here and makes some new highs, could be a viable long here as investors start to come in and find this as a really nice spot to buy in for a return back to $100, right? So Viacom was in my attention for that reason. Now, what about NCLH? So NCLH was interesting in a very similar way. That CCL was kind of interesting, which was this. We had this gap that came through, and then we had a really nice accumulation of shares in that gap. We didn't spend the whole day selling back off. We held a pretty tight range, and in that tight range, we had a really nice amount of volume come through. So seeing all of this volume come through and in this narrow range definitely gave me the accumulation type feels, right? And then today we open up strong, and now we have a nice big run day here. And look at us go now. I mean, quite the move today. So CCL offered not quite as good price action, but this is all on the back of the catalyst of the CDC and NCLH new guidelines that should allow them to move towards getting open. So that's a real fundamental catalyst that people are going to start to look at is this the time to go ahead and buy into NCLH so that we can, get back to maybe the highest highs this stock's ever had once the market really opens back up. So after that, NEO was at the bottom of my list, not the best stock, but we certainly did have a big accumulation here, big spike in volume. We came down and tested that range, couldn't return to VWAP. We made new highs. Now we're crossing back into the averages. It had a lot of volume on the volume screen. Fundamental screen is in DOS. I believe it's under Tools. Let me see. No, sorry, Quotes. It's under Quotes at the very bottom. Under Imbalance is Fundamental. All you do is add the fundamental screen and then grab the anchor from your montage, right, and drag that in. And then you can see things like short interest, the short interest percentage, right, and other things like the float, what kind of sector it's in. If it doesn't load, Brian just mentioned, make sure you've got the fundamentals data package in there. If you're not getting it, that might be an add-in. Or sometimes if you're in Sim, I don't know if you always get that with Sim. So, and then lastly with Snap, and let me tell you, I have to admit, I wasn't expecting to do as well as I did on Snap today. Sometimes you're in the right place at the right time, and I'm going to give Snap a little bit of leeway as that. I mean, I did a very typical trade for me, but I got a much better move than I expected. So as you can see, Snap opened up. It had good news on some upgrades. I think Morgan Stanley maybe. And when I looked at it in pre-market, it had already jumped up to R4. The volume was a little light, but that's not unusual for Snap. And the ask was very clearly set up for a move to the top side. Nothing humongous, but definitely laddered up in a way that I thought this thing could go to the top side. So I decided to go ahead and take a trade here with the loss of R4, figuring, why not? I can get in here, and maybe I can take advantage of this move. Now, this looks like a big move, but what you don't realize is it's a huge move. All right, so this is when I went long. This is what my entry looked like. I was at the long of 55.60. I did $100 risk on this one. So you're talking 15 cents. With $100 risk, that's a couple shares. The reason why I was comfortable putting my risk here is there was a medium-sized bid at 55.52 that I knew if this broke down, that medium-sized bid would likely hold me, and I could at least take only minimal slippage, so max maybe lose 120. So I was feeling pretty good about that, and I was watching the bid heavily on my level 2, and if my bid ever said 55.60, I would pull the trigger, which never happened, thankfully. It cruised up a little bit. I got to 2-to-1 here at $56, and I took off just a little bit there at 2-to-1, 10% in this instance, because I wanted to see how it was going to open. And I did not expect that all of a sudden this thing would immediately snap up to some large asks that were sitting near 57, and it went straight to them. And I had an order already sitting there right in front of them, because that was my first target. And it snapped to them in pre-market, and it was just great. So when the market opened, I moved to break even. It came back, tested VWAP, moved up. I got some more partials as we ticked up. I was up about 8R or something like that at this partial. So one thing I like to do in the pre-market when you're trading a stock that has a little bit of a spread, especially to the top side, is I like to put orders up there. I really like to stick orders up in front of those large asks, because you never know if the price is going to move to them quickly. You might get a better move than you're expecting, and this was a perfect example of that working. So anyway, we moved up here. I got more partials. We pulled back and we held the trending average, made a new high, so I went ahead and added on that. Got one more partial up near 50, just shy of 58. where we stalled out a bit, came under the trending average. We lost the 20 EMA, so I went ahead and took my entire position off there. All in all, surprisingly, about a 9R day on a, which was not expected to be at all. So I'm pretty excited about that. And as you can see now, we've just been selling off for the rest of the day. So I'm extremely happy also with my exit there. R4 breakout is the trade concept, and loss of momentum was the final exit. So, and that seemed to work out just great. So yeah, thanks. Really excited about that. So the main things, just keep it out there for everyone. Just remember, it's good to know all the stuff and all the little patterns and all that stuff, but it starts with picking the right stocks. I notice we often see a very wild array of stocks. Stocks like really low float stocks that have high moves. Those stocks are insanely difficult for even the most established trader to trade. I will not trade them because I do not have faith that those stocks are going to perform well, right? So I know they're very alluring, but I would recommend not trading them. The reason why is because, well, there's a lot of reasons, but just a couple of key ones is, one, order flow and the strength of that order flow. You're going to have a lot of algo trading in there, but more than that, you're going to have way too much sensitive retail traders, right? You normally have longer time frame participants involved in the stock, and these longer time frame participants are the ones that are going to support your stock trades, either hold the price up or help short against it to move it back down, but you need their support. And in these tiny, tiny stocks, there's nobody really going long term on those yet, right? That's why you get those big rips when they finally wake up, because that's when the long term people are actually finally coming in, right? You don't want to use those and those longer ones. Everyone's just retail. It's all paper-handed traders, right? So you get very wild whips in every direction because people take profit very, very quickly, and no one's willing to really hold through drastic pullbacks. So you end up getting retracements that are way bigger than they should be, and squeezes that are way further than they should be, right? So just a little advice on there. Make sure you're starting, and yeah, we can do that. We can go into being more a kind of how I develop a watch list situation. I could do an update on that one. I kind of just covered it now, really, which is all I do is I look for stocks that have volume, and then I look for stocks that have indicators on their daily chart that suggest larger participants are involved in the price action, right? And then I look to things like my Camarilla points or key daily levels, right, to figure out if this is where I think I'm going to get in or get out of a trade, right? And I mean, that's basically what I do. That's what gravitated me to each and every one of these was a key factor, something like high short interest. That's like Wall Street Bets and all those people. That's like what they used with the GME and similar stocks. Those are all short interest plays. Viacom right now is quite obviously a short interest play. So, right now we have Viacom doing that retest of 44.50 that I was thinking would be interesting to see if it does and holds up. So it'll be interesting to see what Viacom does here. But otherwise, focus on those lists. Put yourself in the best potential, possible. If Carlos and Norm aren't willing to trade it, I wouldn't be willing to trade it. You know what I mean? We got to be picky about those and make sure you're not trading into a stock that's just going to have crazy price action. It's very difficult. It's to trade that. I wouldn't trade it. And I'm with all humility, I'm not a horrible trader. I'm not too bad at this. But I would not trade those. So if you're willing to trade those, but I'm not willing to trade those, not saying my way right, your way wrong, just my way right, your way wrong. I don't know. I don't know what to say. Anyway, everybody. All right, cool. Thanks. Hope everybody enjoyed that. Talk to you later on the YouTubes.